Good evening. My name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective channel and the Adaptive Perspective social media platforms. And I help you make your dreams a reality. I will admit that I am pretty worn out, um, but I've got a video to make. So, if you've seen any of my videos before, you know that I love strategy and targeted strategy. That awareness is key because I'm going to keep sifting financial memes. My cats are distracting. Keep sifting financial memes, and in this case, an email, and keep using our investment strategies along with some everyday down to earth common sense to filter and analyze those things. So this is an unedited video. Who knows what you'll hear in the background as I film these in my house. I will briefly show our closed-end fund master, but if you want the full explanation of that, check out my portfolio videos. And then I am not a financial advisor. I am a financial strategist. Please know that I'm not out to slander anybody. I'm not saying that people do a ton of work when they write and create these things. It's just their strategy might not be your strategy. And in this case, their strategy is not our strategy. So I'm just interested in separating the good from the bad when it comes to financial advice, because none of us want bad financial advice. So let me share my screen and we can at least see what started this video. So I do not pay for uh, the emails from this company. I do pay for emails from a different company. I signed up for their free service and I get headline emails. So if I read this headline, I continue to see that this company is not looking at all the facts. Uh, so HQH is a healthcare fund. It does pay a decent dividend right now, and uh, it does have a high discount. But is it what you want to invest in? So this is our closed-end fund master. If you really want to know what the color code means and what these asterisk means, then you can get the full details on my portfolio playlist. And honestly, if I take, it won't take forever to go over, but it'll make this video longer than it needs to be. So HQH, here are the facts as of right now. We can update this in real time. So the current dividend is 0.48. We can close that. This is updated as of Saturday and Sunday's data following last weekend. The price has changed a little bit, as you can see here. And closed-end funds sell on discount. This is the actual value of the company, and for any number of reasons, they sell on discount. So this is currently selling for almost 15% off, which means it's like paying 85 cents instead of $1 for every share that you buy. So what can we glean from this? Well, if you look at just the surface data, okay, so past couple years, COVID dropped, it resurged, it's dropped back down on the current economy, it's coming back up. It kind of hovers around this 20 to mid 20 section. It pays a quarterly distribution and it fluctuates. It's, I mean, it's not consistent, but it's been about in the 40-cent range for a while. Pays quarterly four times a year. You can see their overall price break, not price, but their top 10 and the overall layout for their allocation. What most people don't look at is the pricing. So if we check the 5-year average, so from here to mid 2019, it's hovering around 9%. If you look at the historical data, it's pretty much the same. And the the short end of this target system is, in order to get a triple asterisk, your discount has to be double than the historical discount, and that discount also has to be greater than the current. Hey, look, a cat. Has to be greater than the current discount. So if the overall ongoing discount, and yeah, I mean the price is changing as this cycles through its pattern, uh, but the discount never really changes historically and currently. Oh goodness, little cat down, little cat. He's a knucklehead. If he could find that top shelf, he would. Um, the discount never really changes. And pending your strategy, I mean, I know our strategy, pending your strategy, you could buy low and sell high. You could ride the dividend wave. You could buy at discount and sell at premium. But that discount and premium doesn't always reflect on the price. Um, so the discount is more of a measure of, are you getting a good deal on discount, and are you getting a good deal compared to its historical average? But what I dislike two things about this fund. Originally, it was one. This fund does not reflect the current ownership of the fund. Aberdeen bought out these funds, and I am not a fan of Aberdeen funds. They have a very poor track record of just keeping funds status quo. Like the dividend is a solid dividend. The price never really changes. The discount never really changes. And the dividend pays somewhat consistently, but it never goes up. Uh, at one point, we owned three different Aberdeen funds. We bought two of them. Uh, the fund I like is a bond fund. Um, and you'll see, I mean, if you watch my portfolio videos, you'll see that our overall strategy and how we buy the discount has changed over time. But at one point, we owned AOD and we owned FAX, and we sold AOD because of choppy dividend. Well, so static dividend, meaning it never changed, but inconsistent payments, poor management of what was in the portfolio, and the price never really changed. It was also a consumer fund. I'm not huge on consumer funds, and it was a global consumer fund, and I'm even less fond of global consumer funds. Uh, Fax is a bond fund for the Pacific Rim. Uh, Consistent dividend. The price does change a little bit. Uh, Discount changes a little bit, but it never really gets into that double-digit territory. So would I buy it right now? No. And then we owned a fund named DDF that I enjoyed. Consumer fund, but also just a portfolio when it can. And Aberdeen bought it and um, brought it into its AGD portfolio, and then the same thing. Static dividend, very little price change. Not a fan of what AGD owned. I mean, I didn't buy them because they weren't on my radar, and now all of a sudden they own one of my favorite funds. So we sold AOD and AGD. Now this is our portfolio. Now Aberdeen has bought out HQL, which is the lower priced sister fund of HQH. Aberdeen is interested in buying this fund, which is it's an alternate quarterly fund, but it's all business development and private equity. Um, and I'm just not happy with the overall Aberdeen strategy. Now, that being said, I mean, maybe you like Aberdeen. I don't know. We're going to keep one Aberdeen fund, but the HQL fund is marked for sale for two reasons. One, Aberdeen now manages it. And yes, they raised the dividend. I mean, that's nice, right? Same thing here. They raised the dividend, but it's the overall Aberdeen structure of things. The price never changes, the discount never changes really. But the biggest thing is HQL, the fund we own, the sister version of this. It's an automatic dividend reinvestment program, meaning they pay the dividends, but you never get the dividends cash in hand. They pay you the dividend, then they take it back, and they end up giving you partial shares based on current market value, which is this fund. So we've slowly added all of these partial shares based on how many shares of stock we've owned at the time. And in the long run, I mean, yes, this is our portfolio. So this was as of the weekend. Our portfolio is down this much, and that is our dividend return of investment. I mean, we're strategy wise, our goal is consistent dividends. The up and down overall price of the market doesn't really bother me. So for HQL, if we took away these partial shares, it would change our overall return of investment. But by having the partial shares, oh, that little cat, it does help. I mean, yeah, it helps in dividends, helps on our overall return. Um, but I'm a cash in hand dividend person. Like, so when these dividends come in, whether I spend the 2250 to buy something or whether I just let it sit in our account, I want the dividends cash in hand so that I can potentially use them to buy something else. And having this continually automatic reinvestment into the stock that, I mean, honestly, 57 shares is not a ton, right? Um, to have this automatically dividend reinvest itself for me means that I don't get the dividend. So that if I was collecting dividends, like if I was using that, our ultimate retirement structure to supplement our retirement, if I'm collecting dividends, I never get this dividend because it automatically reinvests itself. So whenever we sell this soon, whenever we sell this, it'll help us get a better return out of this one stock. But it doesn't help us because it's not a dividend cash in hand. That's not very helpful when it comes to planning your retirement or planning for your consistent dividend payments that go into your account. So based on the article, they suggest you buy HQH because it's um, it's below its normal pricing, or say below its normal average pricing, and it pays a goodness. So it's on a discount, and then it's got a an above 10% uh, yield. And from our standpoint, we wouldn't buy it because one, it does not fit the discount parameters for our system. Uh, so the current discount is 14.6. Okay, double of 9 is 18. So it doesn't meet that factor. Uh, go through the system. So it doesn't meet our discount parameters. It's above our price range, and it's an automatic dividend reinvestment, and it's not a cash in hand system. So that doesn't help us. But your your point of this is you have to know your strategy, right? Everybody's got one. And you need to know what your strategy is and how that relates to other people's. You need to be able to talk about it. So I don't think HQL or HQH for that matter are great positions to buy right now because they don't meet our strategy. They don't meet our metrics. But would they meet yours? No. Could you buy it? Sure. Would I buy it? No. Should you buy it? That's up to you. My job is to educate. My job is to give you my take of things. Your job is to know your strategy and then to use my information or anyone else's information for that matter to your advantage, right? I manage our portfolio. I'm helping people learn that they can manage their own portfolio. So should you buy HQH? It kind of comes down to your strategy, but it really comes down to your decision. Is it a good buy based on your strategy? It is not a good buy based on my strategy. Based on the email headline I showed you, they're saying it's a good buy for their strategy, right? But I would not take their advice because I know our strategy and know it doesn't meet our metrics. So does it meet yours? And if it does, then you make the call. Okay. Is it a good buy or not for you? So if you like my content, amazing. Please like the video, subscribe to my channel, hit the like button. And then if you want to know more about the 12 steps to financial freedom, then head to Facebook and check out my group there called Navigate Your Finances. Um, as you face the week and as you strategize for your retirement or as you strategize for whatever it is you're doing in the stock market, you are the captain of that ship. Okay, that ship will go wherever you lead it. So if you have no idea where you're going, and if you have no idea what your strategy is, it's not going to go very well for you. Know your strategy, figure out why you're doing things, give the overall purpose to your mission, right? And it'll be a lot easier for you to figure out how you're going to do that and what you're looking for. So captain your ship, right? Be the captain you need and also captain your ship. Your ship will go exactly where you need it if you know where to steer it. So whatever you're up to, I hope you have a great week. Gosh, on our end of things, it is almost spring break, and I am I'm tired. I'm more tired than I've been in a while. Um, yeah, so I'm looking forward to spring break. I will still make new content new content over spring break, although I'll be honest, I will probably post it in advance or schedule it in advance. So whatever you're up to, whatever you want to happen, whatever it is that you hope you're looking for or seeking or wherever your boat is headed, right? Whatever it is that you're trying to accomplish, it will not happen on its own. Therefore, you must make it happen. If you want something to happen, it will not simply manifest. It will not simply randomly happen for you. Okay. Make it happen and accomplish your dreams. This is Daniel Young signing out. I will see you all on another video. Bye bye.